Hey everyone, welcome back to Corporate Decoder. Today we're diving into a recent filing from Xilio Therapeutics, and let me tell you, it's a bit of a roller coaster. It's like watching a superhero movie where the hero has some really cool powers, but also some major weaknesses that they need to overcome. So what's the big story here? Xilio, a company trying to fight cancer in a new way, just gave us an update on how they're doing. We'll look at their financial situation, what progress they are making on their drugs, and their plans for the future. We'll also talk about some challenges that could be a bump in the road. First things first, let's talk money. On March 11, Xilio announced their financial results for the end of 2024. They issued a press release. As always, they are trying to show their work, be transparent, and fulfill obligations. Let's look at some key numbers. At the end of December, Xilio had about $176 million in cash equivalents, and marketable securities. That sounds like a lot, but it's important to remember that developing new drugs is extremely expensive. So how long will that money last? They expect that the money they have, plus the money they already got, is enough to keep the lights on into the second half of 2026. That means they have some runway before they need to get more funding, which could come from investors, partnerships, or other sources. Now, where did all that money go in 2024? Well, a big chunk of it went to research and development, which totaled around $67 million for the year. That's where they spend their time and energy, such as lab work, clinical trials, and everything else that goes into creating new medicines. A lot of these companies invest their early revenue into research and development. They also had general and administrative expenses, which were about $22 million. That covers things like salaries for the management team, legal fees, and other costs of running the company. All that spending added up to a net loss of around $83 million for the year. That might sound alarming, but it's pretty common for biotech companies like Xilio that are still in the early stages of developing their products. The important thing is whether they are making progress on their pipeline and whether they have enough money to keep going. Let's talk about Xilio's drugs. Specifically, their XL102 drug. It's important because the company is adjusting its plans for this drug. Xilio has decided to focus on a specific type of cancer for XL102, which is called microsatellite stable colorectal cancer. Colorectal cancer is cancer of the colon and rectum, and microsatellite stable refers to a particular genetic makeup of the cancer. They are choosing to focus on this to make the most of limited money. They are planning on starting a trial in the second half of 2025. How about XL201? The company believes they found a dose that can be used in the study. They expect to start the study in the first half of 2025. Here is one more interesting thing about what is going on inside the company. Xilio said that Dr. Chris Heery, the chief medical officer, is leaving the company in April to take on a new job. The company said that they are actively looking for a replacement. So what's the overall story here? Xilio is a company with some promising technology for fighting cancer. They are making progress on developing their drugs. But they also face challenges, including the high cost of drug development and the need to narrow their focus. Now, let's step back and take a broader view. What does this all mean for Xilio? On the one hand, they have a good amount of cash to fund their operations for the next couple of years. They are also moving forward with clinical trials of their drugs, which is a sign that they are making progress. But there are also some risks to consider. The biotech industry is highly competitive, and there's no guarantee that Xilio's drugs will be successful. They are choosing to focus on a specific type of cancer, so there is some risk involved in that because they are betting on a smaller market. Also, it's never great when a company has to replace its chief medical officer, especially when they are in clinical trials. Overall, I would say that Xilio is a company with potential. But it's also a company that faces significant challenges. Investors need to weigh the potential rewards against the risks before deciding whether to invest. The company's success depends on things working out, clinical trials going well, etc. Thanks for watching Corporate Decoder. If you found this helpful, please hit the like button, leave a comment below, and subscribe for more deep dives into the world of corporate filings. Let me know in the comments if there's a specific company or filing you'd like me to decode next.